Hey guys, how are you? Kevin Rhodes with the Kevin Rhodes Group, and sitting next to me to the right is Joe New with Cherry Creek Mortgage. Joe, you want to say hi?
Hey guys, glad to be here. Glad to be here with you.
Absolutely. Joe's one of our top preferred mortgage lenders, and currently we're seeing some pretty amazing stuff out of his office as far as proactive communication, monitoring the market daily and almost hourly. And a lot of lenders are just kind of sitting on the sidelines, not doing much, and Joe's over here providing a lot of content. And one of the topics that came up is forbearance. And we have a lot of unemployment in the US right now, but with that comes some relief that the government has asked of the big banks that are handling mortgages out there, and they've asked them to basically provide a kind of a timeout where homeowners aren't responsible for
Correct.
paying their mortgage. It originally started around a 90-day forbearance, then it went to about 180 days, and now we're looking at about a year. And so while that seems really cool and awesome, and if I was in a position of unemployment, I would be appreciative of that, that also comes with a lot of responsibility because forbearance is not forgiveness. And so we wanted to talk to, Joe's had a few podcasts basically about this, and I wanted to have him talk to you guys about it, and it'll probably spur a conversation that this will last about 10 minutes. So Joe, if you don't mind kind of sharing your thoughts.
Those are great questions, right? And we are absolutely in unprecedented times. I think it's really important that you understand what forbearance is, and it is not forgiveness. When you go into forbearance, whether you know it or not, and today they've made it super simple for you to go, hey, no payments, right?
Yeah, because Joe told me, I didn't realize this, you don't actually have to show any hardship right now.
There's no application.
Right.
It says, have you been affected by COVID-19 and are you looking to go into forbearance? You basically click a button and you get an automated email that says, hey, you're now in forbearance. We'll really get back to you with some details later because they don't know, and that's the problem, right?
Okay.
Is that we don't know how the government was going to give guidance to help people who have done that. So it's really important. I think forbearance is a really important thing. If you have a hardship due to COVID, by all means, if it's what you need, then you need to take it, right? But if you don't,
and this is where it's kind of coming to head.
If you don't,
we think there's a lot of people that don't.
There are some unintended consequences that I believe is going to be, oh no, I got you. And I have a couple of examples. But you need to know that when you click forbearance, that you are attesting to that you have a financial hardship. Well, you've said, I got financial problems, right? They give you the forbearance. It was 90 days with a 90-day option. Now I think it's 6 months, and you can go out to 12 months. At some point in time, somebody's going to start asking the question, where was your hardship? Mm-hmm. So for an example, today, Fannie Mae, Freddie Mac, and Ginnie Mae will not do a loan for anybody who is in forbearance, okay?
So that's where actually part of this video came up, as I heard that yesterday from Joe on one of his podcasts, and it dawned on me that a lot of people who have clicked the forbearance button might also then go and list their house for sale, trying to get it sold. Well, when you go, so say you get a contract in 2 weeks, which is still possible here in Texas, when you go to then buy a home, thinking that you can buy a home and your forbearance will just be paid out of your proceeds, apparently by clicking that forbearance button, it's almost a pretty large ding on your credit, right?
Well, it's really not as, so let me speak to the credit piece.
Okay.
If you are current on your mortgage at the time that you chose forbearance, it will continue to show you current, okay, but in forbearance. If you were late at the time that you chose forbearance, then you're going to be shown as late, okay, but in forbearance. Whatever effects had to the credit has already been right, built in. But what it does is that Fannie and Freddie and Ginnie today have said, we will not do a loan for anybody on a purchase, a refinance, a cash out, or on investment properties where the client or the borrower is in forbearance. So we had a real live example where a guy we went under contract. We had taken the application a week or two later. You realize that the credit report is good for 120 days, okay, right? So he went under contract. After we took the application, he also went into forbearance after we took the application. Mm-hmm. Fast forward, he is out of his option period. He's out of his third-party financing addendum.
So he's got a lot of money on the table, basically.
He's got $14,000 on the table.
Yeah.
Okay? We've approved the loan. And because Fannie is now asking us to check and see if people are in forbearance, we're monitoring that. We've always monitored the credit report after we start a transaction to see if people create new debt, right? Because we have to take that into consideration. And now we're being asked by Fannie and Freddie to monitor whether or not you, the client, have gone into forbearance, because they will not do a loan for you if you're in forbearance. So this gentleman has taken advantage of the forbearance in between our application and disclose rate and prior to his third-party financing addendum being out of date. I can't approve the loan.
What's the waiting period? What's Fannie and Freddie and all them? What are they?
That's the part we don't know, right? So our operations team emailed Fannie and Freddie day before yesterday. The response that we got back was this: that's a really great question. We have a lot of lenders asking the same thing, and that the FHFA, Fannie Mae, Freddie Mac, and Ginnie Mae are in negotiations as to how to handle it, but there's no timeline on the ETA as to the guidance of that. Now, here's what we think is going to happen. We don't know. That's the most dangerous part. They're probably going to come out with some type of treatment. You've attested to a financial hardship. We suspect and speculate that there's going to be some time frame between the time you go out of forbearance, which means the debt is paid back, the house is sold, or you've written a check with all the penalties and the interest if there are any. And is it 3 months? Is it 6 months? Is it 12 months? Is it 18 months? They'll treat it a lot like a client who's gone into bankruptcy, that after that's been discharged, 4 years as a bankruptcy, is, some of those are 4 years before you're eligible to get another loan.
Yeah.
There's going to be some type of guideline that comes out.
So you guys currently don't know how this one's going to end?
We don't know how it's going to end.
Okay.
And so I'm really concerned about the guy who goes, hey, the government's giving us free money.
Right.
And it sounds good. I get that. Yeah. I just think those people are going to have an I got you, and it's real, and it's going to be painful.
I've got a client that's in forbearance right now because their income went in half. He was in the car business and in the finance side, and he didn't get furloughed, he got fired. And now they're selling their house, we're under contract, and they're going to be renting. So we don't have an issue there. But if they were going to be buying, obviously there would be an issue there. But this is really interesting. So you, as a buyer, as a consumer, if you've possibly clicked forbearance, then this conversation directly affects you. And think about it as a seller. Who do you partner with as a listing agent? Is your listing agent asking these questions of the buyer and the buyer's agents as far as digging in deeper other than a pre-approval letter? Because now, obviously, with a story like that, I certainly wouldn't want my sellers a week away from closing finding out that this Yahoo buyer did what he just did in Joe's story, and now we can't close. And so you got to cancel the moving trucks, you got to cancel the utilities, you got to cancel the contract on whatever house you bought or leased. It's enormously disruptive. One of the other things that Joe and I were talking about before we got started is we kind of feel like we're in the eye of the hurricane. The first ban between March and now was pretty disruptive. There was a lot of noise. There was a lot of things flying around that first band of the front of the hurricane. Now it seems to be calm. Some of the states are releasing, going back. People appear to be going back to normal. Social distancing is still important, but it's also people are engaging with other people at dinner tables and things like that. No, so normalcy is coming back. I personally believe, with some of the people that I've spoke with, that we have got about 2 years worth of pretty rough area to go right ahead of us. There's people in the medical field. I got a CPA for the government who does work internally, and their predictions based upon what they specialize in is that right now we're fine, but look at September, October. The guy in the medical field was talking about 16 to 18 months. Something's going to be there. So it's not over. We're in the eye of the storm. Joe agrees. It's kind of calm at the moment. From my angle on the forbearance topic is if you're considering possibly selling a home in the next year or so, you really need to try to detail up, educate up, and make the best decision for you and your family. What I see is currently right now, there is no change in value in DFW. I've not run comps in a neighborhood where any negative or downward trending comps have shown up. houses are still selling and they're selling well. There's not as much activity. The average days on the market have gone up. I ran a report for Keller yesterday as far as new contracts in the city of Keller for the month of April, and it was down 62%.
Ooh.
Which is to be expected. We got a lot, corporate relocation across the US and the world stopped. I've got a lot of relocation companies that are completely on timeout, and they have to wait till this releases and they can get on an airplane to do that, to come back. So obviously when we're shutting everything down and people aren't going to open houses and they're not walking into listings, transactions are going to slow down. Things are still happening. There was an increase from the beginning of April to the end of April of total transactions in the entire city of Fort Worth and Dallas. It went up from about 35 and 40 new transactions in both cities to over 200. So things were ramping up in the typical selling season. But what you as a seller have to forecast is if you're contemplating making a move, what does that look like when all these folks that are in forbearance, or as many folks that are in forbearance, what happens if they can't repay what they owe after that duration? Can you imagine what 1 year's worth of mortgages look like, especially if there's additional fees and penalties on top of that, which I believe there's not supposed to be, but that doesn't mean it won't happen.
Well, we've been told that before, right?
Yeah.
There's no harm, there's no foul. I don't buy that. Right? I think there's going to be some unintended consequences.
So take a mortgage, multiply it by 12, and then you're due to pay that at the end of the 12 months or 6 months or whatever it is.
Or just put on the back of the note.
Put it on the back of the note, which increases your monthly payment, all the while your housing value is going down. And that's kind of where I was going, is I personally believe that there are going to be foreclosure rates are going to rise after this forbearance occasion occurs, because we're at an unprecedented unemployment rate too. And it's not like people just immediately go back to work. It's going to be a slower period. And who knows what happens if COVID fires back up in the fall as well, like a lot of people are predicting with the cooler weather. There's a lot of unknowns. But I think what is known is we have a crazy amount of people that have clicked the forbearance button. We have a crazy amount of people who are currently unemployed, as we know by the unemployment stats, surpassing what was happening in the Great Depression. Those are two things that will affect the housing market. There's no way that it won't, in my opinion. And I predict that foreclosures will come, short sales will come, which are very similar to foreclosures. You have new construction builders who are sharpening their scalpel immensely to get buyers into their showrooms. They're doubling realtor commissions. They're offering to pay all buyer closing costs. They're offering to pay electricity bills and HOA costs for 3 years for clients. Builders have deep pockets and higher negotiation depths than most general listings and consumers. And then the fourth category that you have that can affect your home value is you have the guy next door that might have lost his job, is in forbearance, and he has equity in his home. He has $200,000 or $300,000 in his home, let's say. So when he lists and he has to sell, he can list it $50,000, $60,000, $70,000 less than what the home's actually worth, because he has to get it sold. So we have four categories of opportunities that's potentially going to bring the market down. When that happens, it's still to be seen, but from what I can tell, it's about 6 to 14 months is when I think we're going to start seeing more of that. Joe, I don't know if you have an opinion.
So it's interesting, and I hate to sound like the Debbie Downer, right? And this all sounds almost scary. I believe there's going to be reconciliation with all this. I believe we're going to figure this out. I have enough trust in our government, in our country, us as people, that we're going to figure out how to make this work. I just believe we are. Mm-hmm. I don't think it's going to be painless, right? I think we're going to have some pain. I would tell you that I was listening to a economist from Texas A&M just yesterday, mm-hmm. and he thinks that the opportunity going forward, he thinks rates are going to continue to drop. I don't know that I buy all that. He believes that which is what I believe, that there's going to be a lot of pent-up demand for people who are locked-in buyers. And we turn on that because they bought 10 years ago, they bought their first home, $200,000, $250,000, $300,000. Their families have continued to increase in size. They've outgrown their home and they want something different. They've been in it 10 years. That's about the time now, right? And they can go now with rates where they are, take the equity out of their house as they sell it. They can almost duplicate in a new home, a newer home, a bigger home, duplicate the mortgage they currently have where rates are today. So I think there's some opportunity there. I think it's also going to push a bunch of first-time home buyers off the fence, mm-hmm. with low rates. They go, listen, I've been renting and I'm paying somebody's mortgage. I'm just not paying mine, right? I'm building equity for somebody, just not me. And I think there's going to be an opportunity for people that are first-time homebuyers that'll come off. I think those are good things. I do think that we're going to deal with some depreciation, right? And everybody goes, oh my gosh, I don't want to buy at the top of the market. And we had a conversation about this, that you're also getting top of the market for the sale of your home currently. And that you may be in a position where your home goes through some depreciation. Now I will tell you this, out of the last 5 recessions, only 2 have had negative impact on housing costs, right? From a appreciation standpoint. So not every recession is detrimental to appreciation rates, housing values. So
I guess the first time home buyer, that's going to be, I notice in my industry that, well, being a real estate agent, is that younger people tend to get asphyxiated on mortgage rate. And then if they feel like the home is dropping in value or going to drop in value, they really struggle pulling the trigger. So that's going to be something to work through and talk through. But it all depends. If you're only going to stay in the house a year or 2, certainly understand. For us, when we bought our last house, it was for 10 or 15 year house. I didn't care because I'm going to write all that out. It didn't matter. I started in 2009 when the recession happened, and I've lived price reductions. I've lived foreclosures and short sales. And I personally, I'm not trying to be doom and gloom because I'm a positive guy too. And things are still happening. Every one of my listings but one currently has a contract on it. All have happened during COVID. We've had 5 or 6 closings in the last 30 days, and we have 5 or 6 more coming in the next couple of weeks. So things are still happening. Sellers are selling, buyers are buying.
And I'm amazed that they are, but this market is hot.
I'm just trying to forecast if you have any inclination of potentially selling, getting ahead of the curve in relation to what I think could happen. I don't see how you can have this much unemployment and these many people in forbearance, and you're not going to see foreclosures, short sales, and lower price listings affect your value if you're thinking about selling. Again, if you're staying put, we'll hop in this swimming pool and enjoy it. Joe New is an amazing resource. I'll put his contact information below. If you have any questions, you can email him, you can call him, you can obviously contact me. We just wanted to get this out there. We feel like it's important. We care about you guys as clients, as people, as human beings and citizens. So if there's anything we can do for you, both real estate related or not, please feel free to reach out. And Joe tried to make this thing stay on the whole time, but
I don't know. Technology is always not my thing, So, Kevin, I'm really glad to be here. Thanks. You are a tremendous agent, and you really take great care of your people, and it's those types of people we love to work with.
Awesome. Virtual high five.
Virtual high five. I'd shake your hand, but we're not supposed to, right?
That's right.
So, thank you for tuning in.
All right. Thanks, guys.